Aaron, let's talk about this trade war, reciprocal tariffs. We heard the president not so long ago saying they raise it 25, we raise it 25. That's fair. Now he's saying they raise it 25, we raise it 200. What's the administration thinking going forward here?
Well, Chris, President Trump is fully dug in on this issue of going to war over these tariffs. I should note that the president right now is in the Oval Office with the Secretary General of NATO. They're having a Q&A with reporters that are in the Oval Office recording what is happening right now, the beginning of their bilateral meeting. And the president said on tariffs, "I'm not going to bend at all." He was asked specifically about the tariffs that are being placed on the Canadians, and he responded to that by saying, "We don't need anything they have. We don't need their lumber. We don't need their energy." And so, again, it shows that the president is fully dug in on this idea of charging or matching, at least, the taxes that other countries, Canada, the European Union, are placing on American goods as well. We know that there was a meeting scheduled for today between the Commerce Secretary Howard Lutnick, as well as the Finance Minister from Canada, the Premier of Ontario, coming to Washington. And we were told that they were really here to try to figure out an off-ramp, to try to figure out a way to bring down the temperature on this trade war, this tariff war that exists right now. At the same time, we heard the foreign minister in Canada yesterday say that the Canadians are also willing to keep going with this, to fight, to go on offense here. She is holding the G7 foreign ministers meeting where Secretary of State Marco Rubio is in attendance right now. And she indicated that throughout the day of meetings that they're having there in Canada, she intends to bring up the issue of tariffs with European countries in an effort to stand up together against the Americans in this moment. And so it seems as though, Chris, everybody is dug in on this issue. The Treasury Secretary seemed to indicate that President Trump simply wants other countries to bring down their tariffs and the United States would match suit. He also said that he would counsel other governments around the world that they are on the losing side of this argument economically if they want to go tit for tat on tariffs with the United States, Chris.
All right. Thank you for that. I should let people know that we are indeed following through the pool notes what we're hearing inside the Oval Office. The president was asked, among other things, what about the impact on small business, to which he said they're going to be so much richer than they are right now, continuing what has been messaging from him, suggesting it's all going to be OK. But, Peter, let me play a little bit of what Commerce Secretary Howard Lutnick said this morning about the thinking with the president threatening European wine after the EU taxed American whiskey.
The president was totally annoyed that the Europeans did this. And so you're going to hear back from someone who emotionally cares about America. He cares about America, and he wants to take care of Americans. And why are Europeans picking on Kentucky bourbon
Secretary
or
Lutnick,
Harley-Davidson motorcycles?
Are you saying this is an emotional response?
Peter, you heard the interview asking if this is an emotional response. What did you hear there, and what does your reporting tell you about whether this trade war is being determined by a long-term economic vision or how the president feels that day?
Yeah, I mean, you heard the word annoyed. That's the word I heard there. It's all about his personal pique. It's not about an economic strategy. I mean, when Secretary Bessent says we're not going to change course, which course are we talking about? The course when we put them on, or the course when we take them off? The course when we pause them, the course when we escalate them? It's hard to tell. Businesses, foreign trading partners, they don't know what the course is because the president doesn't seem to stick to a course. He's been all over the map on this. And I think that's one of the things that people find so hard to understand. That's why you see so much volatility in the market. Now, maybe they're right that over the short term, it will make some disruption and long term, it'll create better policy and nobody will remember this a month from now or 6 months from now or a year from now. That's possible. But we've heard that before. The last president I heard say, hey, don't worry about short-term pain. It'll work out in the long run was President Joe Biden when he said, yeah, OK, inflation's high right now, but don't worry, it'll come back down. It did come back down, but people still remember the inflation. They're still paying higher prices that resulted from that inflation. So if they don't manage to get to wherever it is that they're trying to go, and even maybe to explain where they're trying to go, because they haven't really done that very well, then it poses a risk. If they get someplace and then call this off and find a better policy that makes a difference, sure. But right now, nobody has described exactly what that would look like.
Yeah, and Julia, you heard Secretary Bessent saying exactly what we've been hearing from President Trump. Look past the day-to-day market drops, focus on the long-term vision. But are business leaders buying that argument from the administration? And by the way, are small business owners who we've been interviewing who are saying, please stop the tariffs, going to buy the fact that, again, I'll quote him, they're going to be so much richer than they are right now?
Yeah, look, there's a couple of issues for people who are operating businesses right now in this environment. One are the policies themselves. As Peter noted, it's not really clear what the strategy or the end goal is to these trade wars. When he ran on tariffs, it was mostly focused on China, not focused on our biggest trading partners, Canada and Mexico. Throwing fentanyl into the mix as some kind of motivating issue is confusing. We don't know where we're going, and uncertainty is terrible for business. It's very hard to make capital spending plans and hiring plans when you just don't know what the future looks like. And the second is that, tariffs and trade wars are just bad for growth. They're expensive. They raise costs. They throw sand into the gears of your supply chains. So, what we're seeing in markets is, investors are starting to mark down their growth expectations. They had already marked up their inflation expectations a bit, bracing themselves for a trade war. But tariffs can be managed if you know exactly what they are. They're put in place, and then you can navigate around those realities. We just don't know where we're going, and that leaves businesses sort of like deer in the headlights, wondering what comes next.
Let me ask you a big picture question, because we looked at your company's website. It says your work is based on the principle that the U.S. economy is inextricably linked to the global economy. Do you believe the goal of this trade war is to sever that link?
It does appear, and certainly that has been President Trump's philosophy, is more nativist. It looks inward. These are almost sort of what we call import substitution policies, bring things back. But that is really not the reality of the global economy, which is inextricably linked, both on the production of services and goods. There is no real reality to deglobalization. Now, you can address strategic issues like we did with chips or medical supplies. You can sort of identify that you want sort of domestic capacity in key areas. And that could be a reasonable goal. But to sort of have a blanket policy that we're going to put up tariffs on everything and try to reshore manufacturing. I mean, one of the overlooked things that we think is very important is that the U.S. operates a major services surplus. We export education services, we export tourism, we export research and professional consulting services and finance. These are areas that are going to suffer from these policies. So, it's a real shock to the system, and to try to reorient the U.S. economy away from these global linkages very quickly, and again, without a clear strategy of where we're going or what we're trying to do.
Peter, David Sanger wrote a piece in your paper today that says this, quote, President Trump's simultaneous trade wars with Canada, Mexico, China, and the European Union amount to a huge economic and political gamble that Americans will endure months or years of economic pain in return for the distant hope of reindustrializing the American heartland. I mean, we've heard about some rumblings within his inner circle, people concerned about what this might mean. Obviously, the president doesn't have to worry about re-election. And let's be honest about it. Every time, pretty much, doom and gloom has been mentioned when he does something incredibly unconventional. He comes out on the other side. But I'm wondering what you're hearing. Is there nervousness about the level of gamble?
Yeah, I think so. Look, this is a president who has measured his success in the past on the daily gyrations of the stock market. Time and time again in his first term, he would say the stock market increases were proof of his economic genius. Well, now, of course, that they're going down, he's saying, well, don't pay attention to that. I don't look at that. I mean, if you invested money on the day he took office, you've lost money. Americans have lost money under Donald Trump at this point. It's early. Doesn't mean it's going to stay that way. Markets tend to go up and they tend to go down, and it's very likely that they'll go back up again. But it's a remarkable thing for a president who has been so market focused to take the chance that he's taking now. And the question is whether or not ultimately, long term, businesses agree with his strategy if they can discern what it is, and get back into a growth phase. But the idea, as we were just talking about, that we might be heading toward a recession, I would think that that's what the people at the White House think is the most dangerous political possibility for them.
We may end up having to go to the White House just to see what's going on because they're going to play back, Julia, the pool questions that were given to the president and the NATO Secretary General. But let me ask you this, kind of a expectation setting or reality check. One of the things that he was asked about just now was about tariffs on aluminum and steel. And he says he's not going to bend at all. He said, we've been being ripped off. It's a phrase he uses over and over and over again when it comes to his reasons for tariffs, that the United States has been ripped off. What is the general, it's maybe a good line for, the American public. Who wants to get ripped off? Nobody. But what's the reality?
Look, the reality of the U.S. economy is that the U.S. has experienced by far the strongest recovery in the world from the pandemic by every metric. And it's been growth, it's been productivity growth. We've seen inflation cool down pretty substantially without a rise in unemployment. We've really been outperforming every other economy. So this notion that somehow we're getting the short end of the stick is definitely not the global perception of the U.S. economy and not really the reality that the macro statistics paint.